On Mad Money, Jim Cramer and his research associate Nicole Erkin have been bearish on the oil refiners. That's because these are usually volatile stocks and oil has to be just at the right price. But Nicole, these stocks have had a run lately. What's driving that?
On Mad Money, we've changed our view on the refiners in light of what we think is a longer term dynamic. The refiners benefit from the spread between their input prices driven by WTI and what they can charge at the pump, which is Brent prices. We thought that was short-lived. It's lasting longer, and it seems to be a long-term dynamic.
Why is it lasting longer? What's driving that?
Well, it's largely because of all of the discoveries in the domestic shale plays. This is something we've emphasized has benefited the E&P companies like EOG Resources, and is also benefiting a lot of the MLP pipeline companies. But we really missed that it's also benefiting the refiners. You have a lot of oil coming in from the key shale plays like the Bakken, like the Eagle Ford, and from the Canadian oil sands, without the infrastructure to take it out. And the infrastructure is years behind, and that's not going to reverse anytime soon.
HollyFrontier is a company that you and Jim think is well positioned in this space. Why?
The CEO recently came on the show, conducted a really great interview laying out the company. Everyone should take a look online. But HollyFrontier is well situated in the middle of the continent. It doesn't have a lot of the vulnerabilities that the East Coast refiners do with weather. It's really maintained its facilities well, and it's managed its balance sheet very well.
You mentioned the balance sheet. They actually pay a dividend and even offer a special dividend sometimes. Is the special dividend something that you expect to reoccur?
Yeah, the CEO has spoken many times that the special dividend has actually become a regularly scheduled special dividend, and they foresee that being regular for the near term to medium term. And the dividend allows HollyFrontier to have a little bit of a defensive bent to it. While it's an energy play and isn't considered a defensive stock by any means, including the special dividend, the stock is yielding over 6%, which really makes it attractive for a home game or an institutional investor that wants some yield and some regular payback.
So can you buy the stock here?
Yeah, it's had a big run, but it's well positioned, and I would still be a buyer here, yes.
This market has fewer players.
We're coming into a Monday where we're going
would enter in a new stage of tech.
It's a stock picker's market.
Welcome to the 5 dumbest things.
Apple reported earnings.